You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And as always, we're joined by K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, as we're kind of at the beginning of spring now, what are you seeing for futures?
Well, we've seen a, I guess, a bottoming out, or at least a moderating of the downtrend that had been happening for about the last 2 months, it seemed, and we've seen that really across the board in corn. Well, May corn futures, really the whole futures complex, wheat futures for sure, and also in soybeans. Now, some of that might be due to the coming into the contract delivery time frame for the March contract, which started about the last day or so of that month of February, and traders needing to that had been so bearish, having to and had so many short sell positions that they had to buy their way back out. And there's still rumors of some I guess you call it basically battling back and forth of major grain traders that are working out those positions. They have basically till the middle of the month to get it done. So anyway, we're in the midst of that. But we've seen corn on Thursday. Yesterday, March corn closed at 426. It had been 13-14 cents lower. The lowest we had gotten for that contract was down to about 410 or so. So we've come back off of that some, but at least we're not on such a 45-degree angle downward. So that you have that. You do see also that, I think for now, in terms of our perspective on what'll happen in 2024, the harvest December corn futures are back up to 469, and I wouldn't be surprised if we sit at 469 today with almost no worries about production risk, and if we do get some type of uncertainty, volatility in the market, from 469 it's pretty easy to get up to 490, $5, etc. So we'll be watching for that, and see, seasonal trends would support the possibility of that happening. And when you look at soybean futures, March closed at 1157 yesterday, and again that was up for the day 16 cents. November futures at 1153, so that's thought-provoking as well. So you've got kind of the battle of 1153 November soybeans versus 469, about 470 December corn, and from there you get we look at price ratios to see does that higher or lower than 2.3, which is kind of the accepted standard, and so far through most of the last couple of months, we've been seeing soybean prices, new crop prices, being favored over D. So we'll see if that translates into higher soybean versus corn acres. And frankly, again, I know we have a WASDE report coming up here today, basically, but at the end of this month, in March, we'll get the USDA prospective plantings report. So that's I think that's a time for our market watcher audience to have their antenna up, to be watching. Just there's potential with that new information coming out to bring a fair amount of volatility to the market. And I want to talk about wheat also. Wheat futures closed yesterday at $5.34, up 18.5 cents, which sounds like a lot, but we've been really bouncing around up and down in a volatile manner in the last bit of time. That number, pardon me, that's the March contract at 594. Again, that's in closure. Actually, the May contract's what we're watching closer. So my mistake there. 574 3/4, with July at 561. And again, those numbers are a far away from the 6s and 7, well, the 6.5, 7s and 8s we were seeing in the last year or so, but they are as they are, and we at least over the last couple of weeks, we have sort of gotten ourselves out of this strong downtrend and are moving sideways now. I think from other people you've talked to on the K-State network, we have concerns about weather, about either you've talked to them or we'll talk to them. I'm not sure. Our climatologist Chip Redman, looked in information for him as to how much freeze risk we might have now on the wheat going forward, and others can comment on that too. But so that factor is coming into play, and really what's a change now is that we're starting to consider domestic factors in the pricing of wheat first, because it broke dormancy and it's in the field, and I'm thinking that we'll get that type of very likely get that type of concern going forward. Even as we look over the last couple of days, you have well thought out information coming out from analysts talking about how dry the last couple of weeks in February were in some key corn growing areas. So it's the time when we start to bring these domestic production concerns into the marketplace, and we'll see how much volatility and opportunity that gives us in the grain markets.
And Dan, what are we seeing on the cash side of things?
For corn prices, again, we're I guess your frame of reference is everything. Compared to where we were about a week ago, we think we're doing a lot better, but compared to where we've been in the last year, we're still quite low. We're seeing cash prices for corn, the highest bid that I could see in the Garden City area was about 453, about 15 positive 15 basis, and everything else coming in lower. You have a Hutchinson bid about 443, 438 actually in southeast Kansas, and then again 433 Colby, etc. We see the continuing pattern of grain sorghum prices being a little bit higher than corn prices, but yet the forward contract bids for sorghum being at or below where corn was. Soybean prices, highest bids in the export areas coming in Hutchinson 1146, Topeka bid 1121, actually a southeast Kansas area bid 1126, and new crop bids all basically 1050 to just under 11. And then wheat bids, again, if there's something that's challenging in the Kansas ag sector, it's that our wheat prices are the highest wheat prices that we've seen in the areas that we follow were a low of 504 in the Colby area for cash bids, and a high of about 560, 555 in Salina, Topeka, 554 in Hutchinson. So we're it's not that those are bad prices historically, but compared to the increases we've seen in cost of production, they're a challenge. And new crop bids are lower than those across the board. Again, 501 on the low side, 536 on the high side. So again, we're easily covering direct costs. It's when you start to figure out how much you have left on that price to cover machinery and land and family living. That's the challenge, I think.
And Dan, you mentioned that the World Agricultural Supply and Demand Estimates is coming out today, just a little after this airs, and you have some pre-report estimates to share with us.
Yeah, really, I think people will be watching most closely the South American crop production numbers, and number to keep in mind for corn, the USDA is projecting 122 million. Well, pardon me, was at 124 in the February report. The trades generally thinking about 2 million metric tons lower. 156 for soybeans out of Brazil in the February report. They're looking at about 3.5 to 4 million metric tons lower, and a fair range around that. Argentina, they're projecting about the same amount of corn production. However, there's been some dry weather, hot dry weather in the last bit of time, and we'll see if their corn and soybean numbers hold up. Changes over there end up and affect the U.S. supply demand balance sheet, and so whatever we fall short in South America, it probably would support our exports. But right now we're seeing, in essence, from the analyst point of view, not much change projected, almost none in terms of the index stocks for U.S. wheat, corn, and soybeans, which means if something did happen and we did get lower lower stocks, that it would be a surprise to the market. So there's a bit to watch in the next hour or so to see just how these numbers work out.
And Dan, as we round out today's conversation, then giving a quick overview of what we're seeing for exports or the potential exports we could see.
Well, we'll start with our biggest concern, and that's for wheat. Again, a hard red winter wheat, 3.64 million bushels compared to the pace of 4 that we needed that we need to meet the USDA's projection, which had already been lowered about 140 million. And actually, that's up about 2 million bushels from where we were last week, which is really a bearish situation. So the question with wheat is have we dropped far enough on our prices now that we're more competitive in the world market? And it seems that perhaps we're seeing some movement in that direction, but it's not a quote gangbusters deal. We do see soybean exports at and last week we have data for February 29th, ending that week, 52 million bushels. We need about 19 with USDA's projection. So that's a great thing. That's supportive for soybean prices. Soybean meal exports were pretty good the last week or so also. So that's good. And for corn, we came in at about 46 million bushels, needed just over 50 to meet the USDA's projection. So that's been helpful, and we're bought ahead fairly well for U.S. corn also. So that's all for the good. Grain sorghum, again, we're down from last week, but at 9 or 10 or so million bushels, but projecting for the week ending on the 29th, about 5.3 million bushels of grain sorghum exports, and we need about 4.1 to meet the USDA's projection. So grain sorghum has been it's been blessed basically in terms of having a pretty good export pace, and as you and I have been talking for a good while now, you see that's showing up in terms of the strength of grain sorghum cash price bids relative to corn in some of these areas. And sometimes you'll be watching, particularly in South Central Kansas, bids at particular elevators, and then you'll look one day on the screen that you're following that with, and suddenly it'll have jumped about 40 cents at one location, and you wonder what's going on. Well, they're filling a train to go somewhere, probably something to head down to the Gulf to go into export markets. So that's kind of the mode that we're in. Of course, most of that grain sorghum, almost all of it, heading off to China right now for their purposes. A lot of domestic beverage production, from what we understand.
Dan, I appreciate you taking the time to join us once again and give us our grain market update.
Shelby, thank you very much.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you ahead.